Welcome to the Introduction to the Balance Sheet video number 2. Let's take a look at our roadmap. Here we are on the second video. In the prior video, we introduced ourselves to the concept of financial accounting. In this video, we're going to dive more deeply into the balance sheet. So let's go. Now here's a new slide which contains some information about the balance sheet and income statement. I've got categories that we talked about in the prior video here on the screen. On the balance sheet, we've got assets, liabilities, and equity. Remember, the balance sheet equation is that assets equals liabilities plus equity. And I've got the definitions here on the screen. I've also got the same for income statements. Now, in this video, we are talking about the balance sheet. So I put a little square on the balance sheet accounts. We're going to go into those in more detail. And let me overlay some of the accounts we're going to learn in this video. So here are the accounts in this orange box. These are the ones we're going to learn in this video. We're going to learn 5 asset accounts, 3 liability accounts, and 2 equity accounts. This is all I need you to be able to understand in this preterm information. I want you to be able to identify and understand these accounts. So in this video, I'm going to go through these accounts in detail, and we're going to also use Rivian and talk about these accounts with respect to Rivian. So here we go. We're going back to Rivian's balance sheet. Remember, the balance sheet presents the financial position of Rivian at any point in time. It's got assets, liabilities, and equity on it. Remember, cash is one of those assets, and it'll be the first one we talk about. So here is the section for Rivian's assets, and I'm going to zoom in on that section now. Remember, assets are owned resources with economic value. So let's zoom in on that section. This is a listing of Rivian's accounting assets. Now, Rivian may have more assets than this, but these are the ones that accounting rules are allowing them to recognize. Now, for example, you may have kids and you love your kids, but imagine accounting rules not letting you count that as an asset. So it's an important asset in your opinion, but the accounting rules might not allow you to count your kids as a part of your net worth. Okay, so that's the same thing for accounting. We can't count every single theoretical asset that Rivian owns. We just count the assets that accounting allows us to do so. Okay, so here's a listing of Rivian's assets, and I'm just going to define a couple of these for you. The first asset I want to define for you is cash, and of course this shouldn't take long. Cash is money. Okay, now Rivian might hold this in deposits in the bank, or they might have cash on hand like petty cash, but that's what this line is representing, is how much liquid cash does Rivian have access to. And you might remember when we showed it in a prior video that that cash balance has decreased from December 2022 to December 2023. The cash balance has decreased from 11.5 billion to 7.8 billion. So if someone asks you, how much cash did Rivian have on December 31st, 2023? You can confidently answer, well, they had $7.8 billion of cash at that date. Okay, the next account I want to talk about is called accounts receivable. Now, I've dug into note 2. You know, they're telling you to go see note 2. I've dug into that, and I've seen the majority of this account is a single customer, and the customer is Amazon. So let me tell you what transaction has given rise to this asset account called accounts receivable. Rivian has manufactured and delivered these delivery vans to Amazon. So Rivian manufactured it in the factory, and then they delivered it to Amazon. Now Amazon has and is using the delivery vans. Rivian has earned the revenue on selling those vans, but they have not yet received the cash payment from Amazon. Amazon owes them money, and that's what accounts receivable does. Accounts receivable tracks customers who owe the company money. So here on the screen, I have the definition of accounts receivable, and that's the transaction giving rise to that asset balance on Rivian. So imagining this accounts receivable balance is all due to sales to Amazon. If someone asked you, well, how much money does Amazon owe Rivian as of December 31st, 2023? The answer is Amazon owes Rivian $161 million as of December 31st, 2023. And that is an asset for Rivian because they expect to collect that cash in the future. The next item I want to go through is called inventory. And you may have a good understanding of what inventory is. Of course, inventory is raw materials, work in process, and finished goods inventory. So these are electric vehicles that are on their way to being available for sale, or they are available for sale, just not sold yet. okay? That's what inventory is. And what it is though is the cost. So I've underlined the word cost here. It's the cost of the inventory that Rivian has that is on its way to be available for sale. So the hope is that eventually Rivian will be able to sell this inventory for more than its cost. But if you're talking about the asset on the balance sheet, we're talking about the cost of the inventory. So if someone asked you, hey, what did it cost Rivian to obtain the inventory that they have on hand as of December 31st, 2023? You would say, well, it cost Rivian $2.6 billion for the inventory that they have on hand at December 31st, 2023. Next line item is called prepaid expense. And this is a bit of a generic line item. It contains many different items. I'm going to pick out one item, and we're going to imagine that one item is responsible for this entire line item. So let me tell you what Rivian does. Rivian and every company needs to have insurance so that they're protected from significant risk. So companies buy insurance. How does the insurance transaction work? Well, you pay the insurance company a premium, and then subsequent to that, you are insured, okay, for a specified period of time. So think of the timing of this transaction. First you pay, and then in the future you are covered. So you're prepaying for a future benefit. And that's what a prepaid expense asset is keeping track of. How much prepaid future benefits do we have? So imagining this prepaid expense line is entirely the insurance premium that Rivian paid, you might ask, hey, how much insurance does Rivian have prepaid for future benefit as of December 31st, 2023? The answer is, well, Rivian paid $164 million, and that's how much they're prepaid on their insurance as of December 31st, 2023. So now on the screen I have the definition of a prepaid expense. It's prepayments made in advance of incurring the expense, okay? And this could be many different types of transactions, not just insurance, giving rise to a prepaid expense. In a future video, we'll see that an advance to an employee, for example, a wage advance, can count as a prepaid expense. The final asset account I want to talk about is right here. It's called property, plant, and equipment, and sometimes I will shorten this to just say PP&E, property, plant, and equipment. What is property, plant, and equipment? Well, Rivian constructed this manufacturing facility. They constructed their office space, and they've got many fixed assets in these spaces. That's what PP&E is. And again, it's the cost, okay? It's not the value of all this stuff, it's the cost of this stuff. What was the cost of these long-lived, tangible assets that are essential to the company's operations, things such as buildings, equipment, furnishings, land, and machinery? What was the cost of those items to Rivian? And you can say, well, as of December 31st, 2023, the cost of the property, plant, and equipment that Rivian is using to operate is $3.8 billion, almost $3.9 billion. Well, that's it for the asset section of Rivian's balance sheet. Now I want to go through some liability accounts, and there's just 3 liability accounts I want to go through with you. So we'll now highlight the liability section of Rivian's balance sheet. And remember, a liability is Rivian's obligation to outlay resources with economic value. So it's a claim on those assets. What type of claim on the assets does Rivian have? Well, let's zoom in on the liability section. The first liability account I want to go through is right at the top here. It's called accounts payable. What is accounts payable? Well, imagine this transaction for Rivian. One of Rivian's suppliers has delivered a big stack of steel. And Rivian is going to use this steel in manufacturing their products, okay? So this steel is going to be part of their inventory, if you remember inventory. The nuance with this transaction, though, is that Rivian has yet to pay for the steel. So Rivian received an invoice. The vendor or the supplier said, okay, you owe us $100,000 for this stack of steel. Rivian said, okay, fair enough, we owe you the money, but we're not going to pay you yet. And so that's what accounts payable is keeping track of. They're keeping track of people or outside entities that the company owes money to. So if you asked me, well, in terms of Rivian suppliers, how much does Rivian owe its suppliers that they have yet to pay as of December 31st, 2023? I'd say, well, that's 981 million. They owe 981 million to their suppliers, and they have yet to pay that amount as of December 31st, 2023. Okay, great. So there's the definition now that I'm flashing up on the screen, the official definition I'll use for accounts payable. The next account I want to go through in the liability section is right here. Now I relabeled this account, but deferred revenue is contained within this account. So again, we're just going to imagine that this entire account on the balance sheet is dedicated to deferred revenue. What is deferred revenue? Well, take a look at that picture. You see that guy? He's a customer. And in fact, let's consider him a future customer, because the only thing he did is he went onto his computer and put in a deposit for a car. So he wants this nice looking green Rivian car. It's not ready to be delivered to him yet though. But in order to verify that he's a good, honorable customer, Rivian asks him to make a $1,000 deposit. So this guy pays cash to Rivian. Rivian receives the cash. But they haven't earned it yet, have they? They're just keeping this as a deposit. They have an obligation, there's a key word, they have an obligation to deliver the car to this guy. And that's why it's a liability. So this deferred revenue liability represents the company's obligation to deliver their goods or services in the future. And it's the amount that the guy paid. So that $1,000 that the guy paid is being tracked in this liability account. So if you ask me as of December 31st, 2023, how much in terms of customer prepayments has Rivian received they have yet to deliver on? I'd say, well, 395 million. They collected 395 million from customers, but they have yet to deliver a product to those customers. Okay, that's deferred revenue. The final, and I'm flashing up on the screen here the definition of deferred revenue over the picture. Now, the final account I want to go through in the liability section is called long-term debt. And I called it debt on my introduction slide. Debt is just the company has borrowed money, okay? So the company has borrowed money from everyday investors. They've also borrowed money from financial institutions like JP Morgan. So here's an example of a credit agreement that Rivian Automotive has with JP Morgan. They've borrowed some money from JP Morgan, and that's what this line item is representing, funds that Rivian has borrowed from outside entities. So here's the official definition: funds borrowed from a financial institution or other creditor, usually on a long-term basis. That's what debt is. It represents Rivian's obligation to repay that amount. So if you said, how much debt does Rivian have that they'll be required to repay in the future? I'd say, well, as of December 31st, 2023, they actually had $4.4 billion worth of debt, and they'll need to repay that to their creditors in the future. Okay, the final section on the balance sheet is the equity section. Remember, equity is just accounting net worth. It's assets minus liabilities. And there's two accounts I want you to be aware of in the equity section of the balance sheet. And I've renamed these accounts from what Rivian has them, but these are very common names that you might see. The two accounts are contributed capital and retained earnings. First, contributed capital. You might find this slightly similar to the debt line item, but it's a different type of investment. A debt investment is a company borrowing money. Contributed capital is outside investors becoming owners in the business. So here I actually have a picture actually of Rivian's stock certificate. So this is what it would look like if you wanted to become a partial owner of Rivian. They would sell you this stock certificate. You would pay them money for this, and they would give you their certificate, and then you would be part owner of Rivian. Well, contributed capital is keeping track of how much money have they received from outside investors in this type of transaction. So how much have outside investors contributed to Rivian to become owners in the business? That's $27.6 billion, okay? So the definition of contributed capital is funds provided to the company in return for ownership in the company. And finally, the final account I want to go through with you on the balance sheet is called retained earnings. And this account is important because it is the connection between the income statement and the balance sheet. The income statement has net income on it. We sometimes call that earnings, right? This is the account that retains those earnings, okay? Those earnings increase the company's net worth through the retained earnings account. And it accumulates over time, okay? This isn't as of just 1 year, this account is accumulating earnings over the life of the company. So over the life of the company has many income statements. Year after year after year, they have income statements with net income or a net loss in Rivian's case. And those are all being accumulated in this retained earnings account. Now, the other transaction that flows through retained earnings is dividends. If the company does have earnings and they use some of those earnings to pay dividends to their owners, we will subtract all of the dividends the company has paid over the life of the company. So that's what retained earnings is. It's the accumulated net income minus the accumulated dividends over the entire life of the company. That's retained earnings. So that's it. That is the balance sheet of Rivian. We've gone through some of the key accounts, and you'll be able to find these accounts on many different companies. If you go looking at different companies' financial statements, you'll see these accounts repeated over and over again. In our next video, we're going to go to the other financial statement, the income statement, and we're going to go through a couple of key accounts on that statement.